With the Paycheck Protection Program wrapping up and the EIDL grant program taking a while to process applications, I wanted to remind you of a program that will give you up to $7,000 per employee per quarter all throughout 2021, and there are no funding limits, meaning anyone who qualifies will get funded. You hit the qualification criteria, you will get funded. So let's cover how this program works, who qualifies, who doesn't qualify, and how you actually can receive the funds in your bank account. The program is one that you might have heard of before. It's called the ERTC, the Employee Retention Tax Credit. Now, this is an amazing option to fund small businesses. However, it's a little bit complicated, and I believe its complication and its old guidelines are why it's not as talked about as the Paycheck Protection Program or the EIDL, where this is as beneficial or more beneficial in some cases than those programs. So just buckle in. The ERTC is a refundable credit that a business can receive as a portion of wages paid. So they call it a tax credit, but you actually receive it before you do taxes. So the dollar amount of your credit actually increases with every dollar you spend paying your employees. So it scales upwards linearly with how much you pay your employees. So I put together this little presentation here that really breaks down all of the details we need to know about this program. So which employers are eligible for the Employee Retention Tax Credit? A business with W-2 employees that was in operation before February 15th, 2020, you had 100 or fewer employees in 2020, and you have 500 or fewer employees in 2021. So that's the baseline criteria. You hit those, and then you need to hit one of the following two criteria. The first one, the government order test. So for each quarter, you need to qualify for each quarter throughout 2020 and 2021. For any quarters where there was a government order that you had to close your business, you automatically qualify. Now, at this point in time, most businesses aren't going to qualify for that, and there's a second criteria for that, and this is the reduced gross receipts test. So for 2020, and I'm bringing up 2020 because you can actually get this retroactively. So if you're watching through this and you're like, hey, I actually hit the criteria for 2020, you can actually go back and still receive the credit for all of 2020 and quarters of 2021 that have passed. So for 2020, you need to have a decline in gross receipts of 50% in any calendar quarter compared to that same quarter in 2019. So if you're trying to do Q2 2020, you would compare your Q2 2020 gross receipts to your Q2 2019 gross receipts. Then for 2021, what's nice is you only have to have a 20% reduction in gross receipts, again, comparing to 2019. So let's say you wanted to qualify for Q2 2021, you just need to show that you have a 20% reduction in gross receipts, comparing that quarter to quarter 2 2019. If you hit that qualification, you can get this credit if you hit those basic qualifications. Also, there's a little slight caveat qualification for Q1 2021. Instead of comparing it to the 2019 quarter, you can actually use the fourth quarter of 2020, and that's explained right here. And the definition of gross receipts include all receipts received regardless of whether the amounts are derived in the ordinary course of the taxpayer's trade or business. Basically, any amount that's coming into your account, even forgivable PPP loans, are counted towards gross receipts. I suppose they just wanted to make this as simple as possible. If there's money flowing to your account, that is considered gross receipts under these guidelines. Now, how much can you actually receive? This is where things get pretty exciting. So for 2020, an employer, a business, you are allowed a maximum of $5,000 per employee per credit. Now, how this calculation works is you can use up to $10,000 in wages per employee per quarter, and you get 50% of those wages back to you. So if you paid an employee $20,000 in a quarter, you can use $10,000 of that for calculations. 10,000 times 0.5 is $5,000. You get that back. Or if you paid an employee $5,000 in a quarter, $5,000 times 0.5, $2,500, you get that back. And then in 2021, again, it gets even better because that jumped up to $7,000 per $10,000 paid. So 70% of all of your wages paid to employees can be paid back to you. So if you had 10 employees, let's say, who all received $10,000 in a quarter, you would get $70,000 back, or whatever the criteria works for you. I have a couple examples here worked out. And it's important to note also that I have written right here, any wages paid for by the Paycheck Protection Program will not be covered by the ERTC. So you just can't double dip. So here's an example that breaks that down. Q1 2021, Allie's Apples, this is just a fake business we're making up, had a reduction of 25% in gross receipts compared to Q1 2019. So we're good to go there, hit the qualification criteria. Her business has 5 employees with total Q1 wages of $50,000. So $10,000 on each employee, 5 employees. That's the maximum wage that you can use for the calculations for each employee. Her business received a PPP of $25,000. So we take the $50,000, the total wages, we deduct the Paycheck Protection Program wages, $25,000. This gives us $25,000 for calculations in this quarter times 0.7, which is $17,500, and then she gets that $17,500 as a credit back to her business. Now, if she had no paycheck protection loan in that quarter, it would be the full $50,000 times 0.7, which would be $35,000. And here's another just more simple example for a smaller business. This is a business who is eligible for all quarters of 2021. Didn't receive any paycheck protection money, has 3 employees who get paid each $2,000 per month. So $2,000 times the 3 employees is $6,000 in monthly wages that business is paying out. $6,000 times 3 months is $18,000 in pay for a quarter, because remember we have to break this down quarterly. Then we take that $18,000 in gross wages per quarter, multiply that by 0.7, the 70% criteria, and this business would receive $12,600 in ERTC credits per quarter, or $50,400 in the year of 2021. This is absolutely massive. In a lot of cases, this is actually going to be bigger than the Paycheck Protection Program if your business is still affected by the pandemic. If you're showing a 20% reduction from 2019 to 2021, this is absolutely huge. And even if you didn't know about this program, you can go back retroactively. That's what's really, really exciting about this. And that's why I wanted to break this down again. I've done videos on this before, but I wanted to really break this down. That way you can completely understand what's going on. Now, what are eligible wages under the Employee Retention Tax Credit? This is all wages and all health insurance benefits paid to an employee during the time period in which the employer is considered the eligible employer. So it's just the time period of that specific quarter, the wages and the health benefits of that specific quarter. Now, how does your company claim the ERTC? This is where things get a little bit complicated. I wish that they made it a little bit more user-friendly, but we're going to break it down either way. So this is a payroll tax credit, not an income tax credit. So it really doesn't have much to do with your actual annual tax return, even though the payment that you receive back actually isn't deductible. So let's say you had $10,000 in wages and then $7,000 of that got covered. You're going to pay income tax on that $7,000. So that's something to consider. It's still better than not receiving the $7,000, but you have to still pay taxes on it as if it's income, because I guess it is income. So the ERTC, again, is a payroll tax credit, not an income tax credit. It can be received in 2 ways. Either after the quarter, so the quarter finishes, you do all your wage calculations, then you get it back as a credit by decreasing your required payroll deposit. So your payroll taxes that you'd have to pay, you can just decrease those taxes and you just don't even have to pay them. Now, if the payroll taxes that you owe are lower than the total amount of credit that you receive, then you need to file a Form 7200. Or if you want to receive the payment before the quarter, before you actually pay out those wages, you can file the Form 7200, advance payment of employer credits due to COVID-19, beforehand, and you estimate the total wages. Now, there's just some notes here that the advance payment should not exceed 70% of the average quarterly wages paid by the employer in 2019. If the employer was not in existence in 2019, they can use the average quarterly wages paid in 2020. And advance ERTC must be reconciled against the actual amounts. So whatever you use for the calculations, if that's not totally accurate after the quarter happens, you need to do some adjustments on that to make sure it's totally totally accurate. Now with this, I strongly recommend if you do your own payroll to have an accountant help with this, or if you have a payroll processor, they should be able to do this for you because it's pretty confusing and there are some additional nuances that really, if this works for you, you probably should have an accountant do this and go through it for you and hopefully submit it for you. Most accountants who deal with payroll should be able to do this for you. Of course, none of this is financial advice. Now we have just a few additional important notes here. Some exclusions. You cannot use the owner's pay towards calculations. So if you are the owner of your business, even if you receive a paycheck, that unfortunately can't go towards these calculations. And neither can your relatives if your relatives work for you. So the owner's relatives cannot be used for the calculations on the ERTC. And in order to file this retroactively, if you're like, hey, in 2020, I hit all this criteria, how do I get this money? You need to file a Form 941X, which is the adjusted employer's quarterly federal tax return or claim for refund, and you'll be able to do that. Again, I strongly recommend having an accountant do that for you. And then we have this flow chart, which we can break down real quick, just to recap everything we talked about. First, we have the tests here. Test 1, government order to close or the significant revenue lost. You hit one of those, you can move on to the next step. Wages paid, again, not to a relative and not to yourself. Again, not to yourself, which is unfortunate, but if you have employees, it's an awesome program. Employer size, we know the size limits, the 100 employees in 2020, 500 in 2021. Eligible wages, we know all these percentages. Feel free to just pause this and screenshot it if you want to just have this on your phone. And then we can see how the calculations are actually made if you want to receive the payment beforehand, before you actually accrue those wages, or afterwards. And you actually have 3 years until after the original filing to make amendments. So there's still time here with 2020. I would say don't procrastinate it, just get it done with. Especially if your business is struggling right now, you might as well get it done with. Get some additional money in your business bank account and get some additional relief, especially when these other programs are slowly dwindling or taking forever. So I hope that this was helpful. If it was, just make sure you hit that like button, hit the subscribe button. Check out various offers linked down in the description if you want to help me out further, grab some free stocks because they'll also send me free stocks. Check out my various schools and courses down there if you're interested in more education. And I would just like to thank you for watching, and I hope you have a profitable day.